the two key words are aggregation and automation.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. Excited today to have Fernando Angelucci. Fernando, how are you doing today?
I'm doing good, Todd. Thanks for having me on.
Absolutely. A little bit about Fernando. He is the co-founder and CEO of Self-Storage Syndicated Equities, a real estate firm with a portfolio of over 250 million built over the last 4 years. So specialize in self-storage investments, purchase existing cash flowing assets, and do some ground up building as well nationwide. So with that said, and I love talking self-storage because that's just a cool industry. I think I kind of want to get into. I just haven't. But of course, when you jump into a new industry, like a new niche asset class, it's like, we got to know what we're doing before we jump in. So anyways,
right.
Fernando, why don't you give our listeners a bit more about your background and then we'll dive in.
Yeah. Son of immigrants, came to the United States, wanted to do the old school American dream thing, right? Go to school, get good grades,
get
a job and work there for 40 years, retire with a pension.
Yeah.
Unfortunate for them, when I was 16, I read Rich Dad, Poor Dad. Totally changed my perspective on life and wealth. And then graduate with an engineering degree. Only lasted 13 months in the 9-to-5 world, and then immediately started investing in houses and multifamily properties. And then fast forward a couple of years, I was kind of getting fed up with how not only the tenants treated us as landlords, but then how the court systems would treat us as landlords. Sometimes going through 8-9 month evictions when I'm doing everything right, just to have the tenant cause $20,000+ of damage to my rental. So I said, you know what, this is not for me. Never again will invest in an asset where someone lives in my asset. So got out of habitation-based real estate completely. Starting in 2016, I sold my last asset in 2018. And then I jumped into storage, bought my first buy and hold property in August of 2018. And here we are in May of 2023. And we just crossed over 220 million in existing asset transactions. And then we have 140 million under contract to build in the Southeast right now.
Well, awesome. So you went from tenants, toilets, trash to just the trash part. How is it different? I guess I know multifamily. I think most of my listeners understand multifamily, right? But how is that different than with a tenant that's in your self-storage? You still have tenants. So explain why it's so much different or so much easier.
Yeah. So first of all, we don't have tenants. We have customers.
Okay.
Nobody lives in our assets, right?
Yeah.
And the main difference is when you're a landlord, you have to deal with landlord-tenant law. As a self-storage owner, I actually deal with lien law, or what's called property law. So the second somebody places their possessions into one of our units, we get a de facto lien against all of their possessions. And the nice thing is that all of the state laws, the compiled state statutes of each of the states we invest in, they're written so favorably towards the owner of the asset. So if you don't pay, you have a 5-day grace period. If you don't pay by the end of that grace period, we put a second lock on the unit so you can't get into it, or what's called an overlock. And then you have another 45 days to pay plus late fees. And if you don't do that, then we start the auction process. Unfortunately, it's no longer like Storage Wars. Everything's done online. It's kind of like an eBay process. There's a photo of the unit. People bid on it. Whoever wins the unit, they have to put a $100 to $200 deposit down to what's called a cleaning fee. And then they have anywhere between 48 hours to 72 hours to come get all of the possessions and then leave the unit broom swept. And if they don't do that, I get to keep that fee. And then I have a new tenant move in. So the nice thing is, from beginning to end, conservatively, this is 60 days of non-payment, but I get all of that money back from the auction, from the lien fees, the late fees, and then the cleaning fee from the buyer. So much less vacancy, and the court system is on our side.
So is it, you said you get your money back. Is that pretty
Yeah.
consistent? You
Oh yeah.
actually recover your
Yeah.
funds? Do
Yeah.
you make money on it sometimes, or is it typically at
So
least recovering?
yeah, so we're not technically allowed to make money. So if we, just like in a
Gotcha.
foreclosure, if we get over what is owed to us, the remainder has to go to the owner of the unit. If we can't find them or can't
Mm,
contact them, then it has to go to a state unclaimed fund. But what we can do is we can jack up all the fees that we charge to make a profit. I'm using that in air quotes. So let's say you owe your, $150 in back due rent. Well, now there's a late fee, there's a lien fee, there's an auction fee, right? There's a notice fee if I have to give,
yeah,
depending on the state, if I have to give certified mail or how notice has to be done. And so that way we can basically offset our time for going through this process. So you don't
that makes
technically
sense.
profit, but you do
Yeah,
get
but
your money
it's,
back.
yeah, you get your money back. You're right. I'm sure they wouldn't let you charge whatever you want. That's a
Right.
good way to find a
It has to
lawsuit.
be reasonable. Right. It has to be
Yeah.
reasonable. Then the thing is, it has to be all spelled out up front on the lease that they sign.
Hmm.
So you can't
Interesting.
deviate from the lease.
Interesting. That's something I didn't know. That's something you just taught me. That's really interesting and obviously very advantageous to you. You don't have to go through a court battle. Could the client, the tenant, could they hold this up in court? Is there a way for an easy way for them to do that?
No, if we're complying based on the contract that they signed, there's no way that this can be brought to court. The only time this can be brought to court is if, say, for example, a storage owner does not realize that their client is in the military. You cannot auction off military units that are late if they are deployed.
Hmm.
So typically we'll ask on the form, are you military? If so, who is your commanding officer and what is their contact information? And that's one way that we can get a hold of them and say, hey, you have someone under your purview here that hasn't paid. Can you get a hold of them for us, or can you pay whatever we need to do? But you cannot auction those off. We have never ended up in court. Of the 46 facilities that I've done, I've never ended up in court for auctioning off someone. And that's because, we follow all the state rules. There's a very small section in each state compiled statutes that shows exactly how storage will operate in that state. And then our lease lines up exactly to what is on the state law statutes. And they agree to everything up front. So that's one of the things I
Yeah.
love is, if you've ever rented a storage unit, or if any of your listeners have ever rented a storage unit, I doubt you've read the 4 or 5 page contract. You just initialed and then signed at the end. But if you read that line by line, it explains how everything will occur in any situation of you and, having an altercation with the owner of that storage facility.
Lesson right there, listeners. Read your contracts, both the
Always.
contracts that you set up and the contracts that you sign. Know what you're getting yourself into and know what you
Right.
can and can't do. I mean, that's really cool that you can do that. That just makes self storage a lot more attractive, in my opinion, is that you're right. I mean, multifamily, and we own a lot of multifamily. And some states, it's fairly easy to get the resident out. Some states, it's very difficult. And with COVID, that everything became a lot more difficult, and it still is to this day. And it's
Right.
pretty much countrywide. It's harder today than it's ever been to evict a tenant that's not paying rent. And
Here's a
one of
great
the
stat for you. Based on COVID alone, everyone likes to talk about, well, how does storage do in tough times? They say, well, look, during the pandemic, in the first 3 quarters after the country shut down, of the 1,700 CMBS loans that were made to storage investors, only 3 were more than 30 days delinquent. That's a 0.17% delinquency rate. During that same time, multifamily was defaulting at a rate of 1,800% higher, 18 times the default rate of storage on just CMBS loans. That doesn't even take into account, bank loans or HUD or any of that stuff. So just to show you, that's one of the reasons I got out of habitation-based real estate, was because I started to see this more and more of this political pressure of the government inserting themselves into private businesses and telling your tenants what they can and can't do. Because like they told your tenants that they didn't have to pay rent, but they didn't say, hey, Todd, you don't have to pay your mortgage. You don't have to pay your property taxes. You still had to keep paying that, right? It was, and there was a study that showed that most landlords that aren't institutional operators are only 3 to 6 months ahead on their mortgage payments versus the rents. So if your rent stopped for 6 months, all of a sudden you're going into default.
Wow. That doesn't surprise me though. That seems about right for most people. They don't have big reserves. And I don't see a scenario where, and of course there's always a scenario, but I don't, I understand the government's, I don't agree with it, but I understand the government's want to get their sticky fingers involved in housing, right? Because people believe that it's a right, that everybody deserves a place to live, which everybody does deserve a place to live. But some people say, well, they shouldn't have to pay for it. But a self-storage is not a necessity. Everybody doesn't have to have it. Everybody doesn't have to. That doesn't make their lives inherently better, because that just means they've got more crap, right? So, it's hard to argue, I think, as a government to say, hey, we're going to have to require this and this and this, and you can't do this, because it's like, well, wait a second. This is a luxury item. Self-storage is a luxury item. It's self-storage is for people that have money because they have stuff, right? If you don't have money, you don't have stuff. Therefore, you don't need self-storage.
Right. Yeah. The optics that was another piece of why I switched, right? I never wanted to be that one landlord that all of a sudden I end up on, Channel 7 News because poor granny hasn't paid her rent in 3 years. And I just finally said, hey, you know what? I can't carry this anymore. You got to get out. I'm never going to show up on the front page of a news site because someone didn't pay their storage facility. They had a couple ATVs in it, right? They're not going to say, poor ATV owner, how could the big bad storage owner do this to you? It's never going to happen.
What's the future of storage? Where do you see the future of storage? Like, what are you guys kind of doing? It's obviously it's changed a lot over the last couple decades. So what do you see as kind of the future, and how can you be profitable in a company that continues to be relevant?
Yeah. So the two key words are aggregation and automation. Okay. So what we saw happen to the multifamily space 30 years ago, where all this investment dollars come in from these hedge funds, private equity funds, and they started swallowing up large percentages. I think I saw a study that institutional owners of apartment buildings are something like 92% of all the available stock out there. And 8% are your mom and pop single apartment building owners.
Yep.
Storage is the exact opposite. So the top 6 publicly traded companies, they own like 18 to 20% of the entire industry, which is roughly 60 to 70,000 facilities in the US. The next 100 largest operators, which I'm a part of, we own an additional, call it 10 to 12%. That means that 70% of the inventory in the United States are owned by mom and pop operators, which means that they own 2 or fewer self-storage facilities in the nation. So aggregation is something that's happening right now. So I'm part of that feeding chain where I will go buy the single mom and pop deals and I'll put them into portfolios of 10 or 20 properties. And then I'll sell them off to a second level aggregator that will buy a couple of these 20 property portfolios and then sell 100 of them to one of the top publicly traded real estate investment trusts. So that's number one of what's going to happen and what is happening in our industry. The second piece is automation. Storage has historically been known to be a laggard when it comes to using technology. And recently, what we started to see is this big push in the storage industry because you have these technology companies that are being funded by private equity firms coming in and trying to infiltrate our industry. So, for example, we now build facilities that once they're leased up, they can be run completely automated, unmanned whatsoever. And then these are not small, dinky. I'm talking, 100,000 net rentable square feet, 3 stories, 150,000 gross square foot building. Another piece is the tenant side technology. So the tenants now, there's these locks that are automated that you can unlock with your phone. You can unlock your way to get into the facility with your phone. The sensors on the unit will detect motion and heat sensing to make sure that there's nobody living in your self-storage facility when they shouldn't be, or nobody robbing your facility when they shouldn't be in there, etc. So that's another piece of the technology component that's coming in. And then all the service providers are also starting to become very tech forward and starting to be interested in the data that is being spit out by these operators. So you have a company, Storable is a perfect example. They have bought the insurance company that was the largest self-storage insurance company in the nation. Then they bought the largest property management software, two of the largest property management softwares in the storage world. They started buying, door and building suppliers. So you're seeing this kind of tech forward where they want the data, because what they can sell is the data from your facility to other operators or high level, research firms, etc. So those are, I think, the two big things that are happening in the industry. It's very interesting. Storage used to be this ugly kind of stepchild looking asset class where if you weren't walking in it, if you weren't walking in at a 15 cap, people are like, what are you doing? That's a terrible investment.
Yeah.
And now you just saw Public Storage made an offer to the number one operator in the country, Public Storage, made an offer to buy like the number 6 or 7 Life Storage, and they for $11 billion, and they turned them down. And then the number 3 went to buy them to become the number 1, made a $12.87 billion offer that was accepted, which turns out to be like a 3.67% cap rate.
Wow.
They bought the entire company.
That's astounding. However, when you really think about it, if you think about the ease of operating self-storage, and if this is an industry that continues to be profitable with risk adjusted, good risk adjusted returns, I mean, if that risk is taken off the table, it's really a pretty easy investment if you're doing things right and you've got the technology implemented. I can see why a big company like that would be okay with lower cap rates.
Yeah. And then you also got to realize, cap rates are just one piece, but the real question is, what is your cost of capital? So Extra Space, their combined cost of capital is in the 2 point something range, because they went out to Europe when there was negative interest rates and they raised a bond for like 7/8%, 8.75%. And that was a $500 million bond. So $500 million. And that's their equity cost. Right. And then now they had these crazy lines of credit that were in the 2 to 3% capital range. So their combined, let's say their combined cost of capital is 2.1%. They buy a 3.67% cap rate. They just almost doubled their money there.
They're doing just fine.
Yeah, exactly.
What does somebody get into the game? How does somebody how do you find the great deal? Like, what do you do?
Yeah. So usually what I tell people, if you're not educated on the business, first get educated.
Yeah.
We put out a bunch of free education on all of our social media channels. There's a bunch of other guys that put a bunch of free education out there. Bigger Pockets has some awesome resources. There's a lot of books that you can buy pretty reasonably priced, 15 to 18 bucks, that talk about how to do storage. And then if you need some more on hands learning, there's all these types of courses and seminars that you can also pay for as well. Yeah. Then after you've gotten educated, the biggest thing is just start driving for dollars. The interesting thing about self-storage is because it's such a, in air quotes, new asset class, it really started in the 60s, but really caught steam like in the 80s. A lot of the land is misclassified. So when I buy lists of all the storage facilities in the nation, my list comes up with about 37,000 facilities, but we know that there's at least 60 to 70,000 out there. So there's so many misclassified facilities that the big guys aren't catching because we're just not seeing them, and we have no way to get to them.
Why are they misclassified? Like, what are they classified as?
So in the beginning, self-storage usually was placed on farmland, right? Someone had a couple extra acres of land that wasn't very productive, so they just put up some sheds. and then they started renting it to people in town, right? So that may still be classified as farmland in the SIC codes or the NAICS codes, which is the main two codes that we use, or code systems that we use to identify where these facilities are and get a hold of the owners. So we have found a lot of partnership opportunities with people that are getting started in storage. And they said, hey, I was driving to work one day after I heard your podcast. Now I see self-storage facilities all over the place. So I stopped into one location. The owner was sitting behind the desk. I asked him if he wanted to sell. He said, yeah. And then they call Fernando and say, Fernando, how to do this? And then I'll explain, So finding facilities, these mom and pop facilities that are misclassified, that are in your hometown, is one of the easiest ways to get involved. Now, if you want to go less active and you want to go more passive, then what I would say is start looking for good syndicators and sponsors and invest passively into their self-storage funds and opportunities to learn how the industry works before you go in, if you want to do it active. So some people want to go the active route. Some people never want to go the active route. It's really personal preference.
Yeah, no, good point. I mean, there's two ways to do it, right? And the active route, you're definitely going to have to put the time and the effort into it. You want to make sure you're educated. You're probably going to make some mistakes going the passive route, as long as you find a good operator. It's you certainly don't have control, but your returns could be just as good or maybe even better a lot of times. So my question, you were talking about the farmland, and so that this thing's zoned agriculture because it was in a farm. Like, my question is it profitable? Does it make sense to buy self-storage in rural communities? Do you buy anything in more rural communities, or does it have to be large MSA?
One of the largest users of self-storage are in the rural communities. And you might think that doesn't make sense because they have all this land and et cetera. But you got to realize that all of these rural communities usually have a hub city, or the towny folks, right? And they don't have land to store things. We've made a lot of money on the rural assets, especially in the tertiary, secondary and tertiary markets, because we're not competing against the REITs to buy those. So now all of a sudden, instead of us, scratching to try to get a 6 cap or a 7 cap, we're walking into 9, 10, 11, 12% cap rates because we're the only ones at the negotiating table. These things are super profitable. Unlevered, your expense ratio, you're at like 32%. 30 to 35% of your revenue will go to your expenses, right? With leverage on, especially these cash flowing deals, with leverage, if you're putting, say, 70 to 75% down, these things are cash flow positive after 65% occupancy. So it's still a lot of margin after, that debt service is taken care of. And then the nice thing about self-storage is that it's technically a business as well. So it also qualifies for SBA financing, Small Business Administration financing, which allows you to take these things down with 10 to 15% down payment. And the SBA has, depending on if you go with a 7A or a 504 loan, you have even discounted blended interest rates that you'd be paying better than market rate. So a lot of opportunities to get into the game, especially in the smaller, call it less than $1 million purchase price, secondary, tertiary market, 20, 30,000 net rentable square feet. There's a ton of opportunity in that space. Those are the most abundant self-storage facilities out there.
And I would think those would probably be the ones that have likely the greatest value add as far as automation. A lot of those, like you said, like the guys in the office, they're working. You don't probably need an office after you automate it, or maybe you need an office, but it's somebody working there here and there.
There's multiple ways to do the value add. The very first thing we always try to go what's easiest to what's the hardest. It's kind of the spectrum, right? So the easiest things are the second we get in, we just raise rents to market rate. One of the things that these mom and pop operators never do that we do is they don't go out on a quarterly basis to see what their competitors are charging in the market. And they usually will, because they're sitting behind the counter, they become friends with their tenants or their customers. And then all of a sudden, what Todd's rate was in 2000 is his same rate in 2023. There's been no adjustment for inflation or keeping up with competitors whatsoever.
So they feel bad to raise the rates.
Yeah. I mean,
because they see him at the local bar.
That's right. So, there's some facilities, especially in these more rural towns, where we walk in and day one with our estoppel letters, we send out rent increases all the way up to 70% increase in rent. And that's still usually cheaper than the next most
Yeah.
the
Where are you
next
going to go?
cheapest person in the market. So that there's newfound value right there, right? The other thing is expenses. A lot of these guys, they have, either they pay too many people or too many hours to manage it. There's been, I mean, you should have seen the crazy stuff. Sometimes I'll buy facilities where they have like a $500 a month cable package for their manager to watch cable TV while he's sitting there doing nothing. I mean, it's ridiculous. So then you have the opportunity to drop expenses. We'll contest property taxes because they usually never do that. We'll get new insurance providers. I mean, anything we can do. We'll start adding the requirement that renters have to, or they have to carry renters insurance. And if they don't show you proof of renters insurance within 30 days, they are automatically enrolled in your renters insurance, where you get to carry anywhere from 40 to 70% of that premium goes to you on a monthly basis. So there's another additional revenue stream. You can put solar panels on these things. You can put 5G cell phone towers on these for additional income. These are all the easy things. Once you're done with all that, then you can start going into the CapEx items, which is painting the facility, fencing it, putting an automatic keypad gate and entry system, putting automatic keypads on the doors. And then if you have additional room, then you can even expand and you can add additional units. Maybe you have additional land, but you can't put down permanent structures because you have easements or setbacks. Well, then you can actually get modular units that you can literally move around with forklifts, and you can put them down and move them whenever you need to. So there's a ton of ways to increase value on these mom and pop facilities without having to spend a ton of money.
That's great. That's great. I want to shift gears to your mindset of this shift to becoming an entrepreneur. You came from an immigrant family. You said both your parents.
Correct. Yeah.
So they come over here. Were you born here in the U.S.?
I was born here.
You were born here. Okay. So I had a couple really good friends that very same thing, and just love the I guess the story behind it. So take me through the mindset kind of shift, and were your parents entrepreneurial, kind of that journey? I just want to understand that dynamic there.
Yeah, so they were not. So they're more on the 9 to 5 world. The issue was in Brazil during the late 70s, early 80s. There was a lot of hyperinflation, and then also civil and political unrest in Brazil. So even though they got their degrees and they went out to go work, there just was no opportunity. And if you didn't spend your entire paycheck that day on groceries, the next day, sometimes it would be double the cost, right?
Wow.
So they wanted to go to land opportunity. They finally got in. They actually didn't know each other in Brazil. They met each other in church here in Chicago. But their entire mentality has always been, go to school, get good grades, and then you go work for a company, and you work for that company for 40 years and you retire with a pension. That has been my mom has been with the same company for 30 something years. My dad just retired after working for a few different engineering companies. And my dad has always been, like typical of most immigrants, pushed me towards more, call it hard majors. So, STEM type majors, science, technology, engineering, math, that type of stuff.
Yep.
And even though I did graduate with an engineering degree, because I read Rich Dad, Poor Dad, I realized that, the ones that create wealth are the ones that they make their money work for them, as opposed to exchanging time for dollars, right? So I'm usually exchanging dollars to get time, as opposed to the other way around. Right before we started recording, one of my main pillars, if you will, the things that I built this business to do is to serve me, especially in the time freedom part of the equation. And I just got back from traveling around Brazil for 7 months, right? And you couldn't do that as someone that worked at a 9 to 5, or most likely could not do that,
Yeah, and that's awesome. So but you worked for a couple of years, right? You worked for an engineering company. Is that right?
I worked for a Fortune 49 company for 13 months, and then I quit.
13 months. So this isn't, when you quit, Was it that you already were purchasing and owned real estate, or was it you just quit because you're just done and you're going to go do this?
Yeah, so I've always, after reading Rich Dad Poor Dad, I look for any ways to get entrepreneurial experience. So when I was 19, freshman at University of Illinois, I ended up starting a painting company where I would take a
Hmm.
bus from Central Illinois back to Chicago, knock on doors, and give people free estimates to paint their house, book them for the summer, and then hire my friends over the summer to paint the houses for me. Right. So that was my first, that was still to this day the hardest thing I've ever done in my life. Right.
Yeah.
Just this tiny little painting company versus me running now a multi-$100 million self-storage company because I didn't know what entrepreneurship was. I literally was learning trial by fire, basically.
But that's how it starts, right? You're
Right.
learning, you're seeing what you want to do and don't want to do. You see how difficult that was, but you also got to learn from your mistakes and
Exactly. Yeah. So I learned a lot of lessons from that entrepreneurial journey. And then, I also got a taste of what it's like to have time freedom. If I'm too tired in the middle of the day, I can go home and I still have people working on my behalf. Um, so then when I joined this Fortune, 50 company as basically a technical sales rep because of my engineering background. I mean, it was brutal. I was working, I'd be out the door at 5 a.m. because I covered half of Iowa as a territory from I-35 to the Mississippi River. And then I wouldn't get back until 8, 9 o'clock. And that was every day. And 3 nights a week, I'd be on the road type thing. And like my body was deteriorating. It just wasn't for me. And then at the same time, my take home was, pennies. After, 401k match, I wasn't really making much money, even though I had an engineering degree from a top engineering school in the country. And I said, you know what, this is not for me. I tried to be entrepreneurial, I should say, tried to be an entrepreneur inside of the business and show how. I said, why are we doing it this way? As fresh perspective, fresh eyes. Here's a way that we can save $1 million in my territory per year. And they just don't want to hear it just because I didn't have the
Yep.
the time behind me, right? Yeah. Who are you? You're
Yep.
new to this company. This is how we've always done it. It's like, I understand it's always how you've done it, but sometimes you need fresh eyes to be able to shake up the system to make profitability. And they didn't want to hear it. And I said, you know what? I'm out. I'm done. If you're not going to let me build up this territory the way I want to, then I'm just not going to participate. So I left, and then I started buying houses immediately. Actually started wholesaling houses. So selling the contracts on properties in the beginning. Cause I've always been a person who's like, how do I test the market without putting too much risk into the game? Right. So
Yeah.
I've done those every asset class I've moved through. I wholesale first because that means that if someone's willing to buy this asset from me at a higher price with more experience than me, that means I'm doing something right on the negotiations and I'm valuing it correctly. Right. Then after I have a few of those under my belt, then I actually start buying the asset class myself to flip, and then eventually start saving up those proceeds from the flip to then start buying and holding that asset. And I did the same thing with multifamily. I did the same thing with self-storage. It's always the same way.
That's a great way to get started in any kind of real estate asset class, is to wholesale arbitrage the deal. If you can either find somebody to buy it and partner with you, find somebody to buy it from you, and you can make a profit, now like you said, you know how to find the property, you know how to negotiate the property, and you know that the numbers you're coming up with probably work because other people that are experienced are purchasing it from you or with you to JV with you. So that's a great way to get started in this game. It's so hard to start a lot of times because you're paralyzed. You don't know if you're getting the best deal,
Right.
and you might not have the money a lot of time usually to get started. So that's definitely a great way to get started.
Yeah.
All right. We got a couple last questions I want to wrap up with. What's a favorite book that you can recommend to our listeners?
Oh man, this is always a tough. I'm an avid reader. My Audible has over 250 books in it. So maybe I'll give you a couple categories. So if you want a book on how to build businesses, I would recommend Traction by Gino Wickman.
Yeah.
So you want a book on tactical empathy or being a better listener, which will help in everything, negotiations, partners, friends, family life. I would recommend Never Split the Difference by Chris Voss. And then if you want a book on kind of challenging your norms and time freedom, I would recommend Vagabonding by Rolf Potts, which is the forgotten art of long-term world travel. That's actually what sparked me to go and live in Brazil for 7 months over the winter.
I probably shouldn't read that book because then I'm going to want to go travel for 7 months. And my wife and kids might not like that.
Bring them with.
Well, I'll read that in a few years when it's more appropriate.
A
Um,
lot of the examples in that book are from families that did
yeah,
this vagabonding journey
yeah,
with 2, 3 young kids, etc. So challenge your assumptions. That's the whole point of
yeah,
the book.
right. Well, and that's the truth right there is challenge your mindset always, right? Always be changing and growing and learning. Um, Fernando, what's a way you like to give back?
Yeah, so this is a huge piece of our business. We have 4 core values in our company. It's FIDO, so it's fun, integrity, drive, and others first, with others first being the most important. The interesting thing about self storage is that it is a hyper localized business, meaning that 60 to 90% of our tenant base comes from a 5 to a 15-minute drive away from our facility. So
Hmm.
we like to give back to our local community. So yes, there are, people in Africa that need our help, and yes, there's people all over the place, but people end up forgetting about our local communities. And in our local communities, there can be people that, they're trying to escape a tough relationship situation, like battered women's shelter type thing. Maybe they have food insecurity. Maybe they don't even have enough money to really support the education side. So, buying backpacks with school supplies in them at the beginning of the year. We always do this for, usually it's within a 5-mile radius of our self-storage facility. We'll ask our local manager at that site and we'll say, what is a cause that is near and dear to the community that you're in, and how can we support? So we've done all types of things. We've donated to all the causes I just listed. We've worked with police departments to do food drives and toy drives. That's one of our biggest components. We donate 1% of our net profit to these charities and these causes each year.
That's great. That's great. I love the local aspect of it too. You know, a lot of us are investing in communities outside of where we live. And it's so easy to give back and to focus on the community you're living in, but also focus on other communities and focus on the communities that you're investing in, because frankly, that's where the dollars are coming from, right? So focus
Right.
putting the money back into those communities, and it's going to quite frankly make you a stronger partner in the community as well. People, I
Correct.
mean, it's not the reason you're giving back, but it's a result of you giving back is that the community starts to recognize your name more. They start to appreciate and trust your name more. And when they're choosing where to go for self storage, your name's going to be on the top of their mind. And so because of your giving, you're ultimately creating a better customer base as well.
Yeah, you hit the nail on the head there. I mean, let's be honest. Self-storage is not sexy. I can't put a jacuzzi into one of my units or have, flat screen TVs to like entice people like you can with multifamily. It's metal and concrete. That's all everything is. It's a metal box with concrete floors. So if I have 2 identical metal boxes that are at the same price, but one of them, if you go frequent their establishment, it's going to give you that feel good feeling because you know that they donate back to the community. That's a win for everybody. It's a win
Yeah.
for us as the operators. It's a win for the community that is basically, I mean, like you said, our profit is coming from the community. So why
Yep.
not support our community so that we can grow together? A rising tide raises all ships.
Right. Absolutely. Love that. Fernando, last question. What are your 3 pillars of wealth creation?
This is a good question. So I like to think of wealth as freedom, right? It's not really a dollars and cents thing for me.
Yeah.
So I'd say number one is having the ability to have time freedom and freedom to do the things that I want with the people that I want whenever I want, people that I love and hold dear, family, friends, etc. Um, the second pillar is to be humble and to give back. You know, lead with abundance, lead with contribution, and you never need to ask for anything in your life if you're always, putting that first contribution or that abundance forward.
Yep.
Kind of the go giver lifestyle, if you will.
Yeah.
And then I'd say number three is to realize that we have a finite amount of time on this earth, and things that we may think are important today may not matter in 5 years, or let alone 5 months or even 5 days. And that's why our first core value in Fido is fun. If I'm going to be miserable running a business, then why am I running this business? If the people that I'm working with or working for are miserable, then what's the point, right?
Yep.
We need to realize that, every day's a gift, and we got to treat it that way.
Yeah, the joy of running your own business, and if you're running your own business and you're like, that's not me, then maybe you should look at a different business. But the joy of running your business is it doesn't feel like work.
Right.
Like you get up every day and it's like, what am I going to do? What would I love to do today? I'd love to go to work. I'd love to create my business. I'd love to continue to grow this thing like that. That's the definition of creating a business that's fulfilling, right? That really is making a difference and an impact in your life and probably other people's lives as well, as when you love what you do and it doesn't feel like work.
That's exactly right.
Yeah. Love it. Love it. Fernando, really appreciate the time. How can our listeners get in touch with you, learn more about what you got going on, check out your self-storage funds?
Yeah, so there's the kind of more passive approach where you can go to our website, ssse.com. You can follow us on social media, SSSE or Self Storage Syndicated Equities. You can follow me on social media. The Storage Stud is where you can find me at basically all the social media channels. But I'm somebody that likes to take massive action. I like other people to take massive action. So here's what I'm going to do. I'm going to give you my cell phone number. And if anybody wants to reach out right now, pause the podcast as long as you're not driving. Pause the podcast and just shoot me a text if you're interested in learning more. And if you have any questions, this is my real phone number. Okay. It's area code 630-408-8090. Now that's only for the massive action takers out there.
Okay. So if you're just going to call him and ask him what his favorite color is, do not call Fernando. But if you're ready to take some action, give him a call. Fernando, really appreciate it. Appreciate your time. And man, you have a fantastic rest of the day.
Thanks for having me, Todd. I appreciate it.
Absolutely. Take care. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.